Look, every guru out here tells you to use leverage. Almost nobody tells you what happens if interest rates change. Almost nobody tells you what happens if the leverage goes the other way. And that's the story. Leverage works in up markets. When you're borrowing and you're able to grow quickly, it is a huge driver to your growth. But in flat or down markets, leverage actually becomes a treadmill that it's hard to get off of. Imagine that treadmill rolling, 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 and you're trying to get off, but you can't slow it down. I can tell you that story because I bought hundreds of rental properties, borrowing money at 3 or 4%, assuming that there would be rent growth every month and assuming that it would get easier to pay the mortgages. What we actually got between 2022 and 2026 is flat rent growth, right? It went up really fast and then it kind of leveled out, and in some markets kind of went backwards. And the equity that I thought I had in the properties wasn't actually materialized, because when you go to sell rental properties and you owe more on them than you can get, that's not equity. But on paper, it looks like it is. You see, the wealth building narrative of real estate is real. Buy lots of properties, rent them out, collect all of this cash flow. All of it works until it doesn't, until you can't borrow money anymore, until you realize that you're really just borrowing yourself into a modern day type of slavery, because you're going to be on a hamster wheel paying these banks back for years. You see, the biggest mistake is not stress testing for what happens if rents don't go up. What happens if rents actually come down? What happens if the expenses on the properties go up? And believe me, they will go up. Property taxes are still going up. Insurance is still going up. Maintenance and repair costs are still going up. And in some cases, vacancy is going up. And so, spoiler, when this happens and you haven't stress tested your deal, you will face nightmares in your portfolio. And I'm on a mission to help investors who are facing this right now, or to help new investors who don't want to ever go through this. Y'all, I promise you, there are times when you're dealing with a portfolio in this situation where you wouldn't wish it on your worst enemy. Bank stress test. Most investors do not stress test. And there's a reason why they stress test before they loan money. You see, a smaller portfolio that you build slowly with cash down is going to be more resilient than a huge portfolio where you're financed to the teeth and you're cash poor. And I will tell you right now, most investors are completely cash poor. The money I'm making now isn't coming from the portfolio. It's coming from somewhere else. And the portfolio is still a tremendous wealth building tool, which I love helping people start to build. But I'm going to do a live breakdown of how to build actual passive income through real estate. It's the thing that works when everything else is on pause. It's the thing that's working right now, even in a very challenging market. And I want you to register below, click the link below, apply to have a strategy call with me so we can talk about what's working right now and if it makes sense to show you what's working in 2026. Click that link below, and I look forward to talking to you soon.